It's a monstrous week for tech, and here at TheStreet.com, we are going to be covering a lot of events aggressively, starting with Apple, their event, also the CTIA, Gary Krakow, our correspondent covering all about the cell phone industry. So we want to know, Jim, since you cover the sector very closely as well, what are some names we should be keeping an eye out for?
Well, first, generally, I thought that tech would not be as bad as it is. There's been a great trade historically, which is you buy tech in September, you own it till February, and that trade has just completely gone awry, and that's my bad. I was just looking at, I like to look at patterns. That had been the pattern. It's obviously not working. Second, the semiconductor index is now back to where it was in 2002, which is extraordinary. It means that there was no value created. If that's true or not, I don't know. Third, it's very rare that we've ever had both cell phones and PCs and software all be bad. Software being Salesforce.com is my measurement. Oracle not doing that bad. Dell PCs, obviously. Nokia cell phones. So my orientation is to run light because it's been wrong. Research in motion is down. I mean, I like research in motion. I've been dead wrong on research in motion. I was dead right on research in motion for the last 3 years and dead wrong for the last 3 months, most certainly. But I think that if Apple were at 120, that's where I wanted to put back the rest of my position. I told people to sell all but 3/4 of their Apple, and then when it got down to the 150s, 160s, I said buy back a quarter. Right now, that last quarter was bad. The last quarter I told people to buy. I believe that tech will be oversold enough that you should get a bounce. But once again, I want to say no one cares. And people want to sell everything tech. They just want to sell everything tech because they felt that the techs are owned by hedge funds and that the techs don't have any growth because the techs were Asia and Europe. And Asia and Europe have now gotten weaker suddenly than the United States. So I want to look for tech for trading rallies. But I'm not gonna mince words. Tech went into bear market, and I did not see that coming.
And everyone's searching for tech on our site. Apple is a big search. Cisco.
Look, it went into bear market mode. I just picked at some Cisco yesterday because it's now below where they reported a good quarter. I picked up some Hewlett-Packard because I think Cisco's taking share from Ciena, Hewlett-Packard taking share from Dell. But I have a little longer time frame than people. I bought 100 Hewlett because I think it could go to 40 where I buy 200 Hewlett. But I want to be very clear that I was thinking that there'd be a tech rally like there had been every other year, almost every 16 out of 17 years. It's looking right now that it's 16 out of 18 years. And I want to go on record saying that I was dead wrong because I was playing the percentages, which was a remarkable percentage of 16 out of 17 being right. And this year, worldwide, tech hit a wall, and I did not anticipate how quickly it hit.
All right, some awesome perspective for you as we head off into a heavy week of tech. Thanks so much, Jim Cramer. This is Wall Street Confidential. Stay tuned.